Crypto Ladies and Crypto Crackheads, today is Monday, July 12th, 2021, and you're about to get Timified. But real quick, a word from one of my sponsors. For your viewing pleasure, Timification is best enjoyed on ×2 speed. Native English speakers, please take this time to turn up the playback speed on YouTube to ×2. Non-native English speakers, turn it up to 1.5 times speed. Let's get ready to have some fun. Thank you. And all this excitement about crypto, everybody flooding to the crypto, and views on YouTube are skyrocketing, and interest is unparalleled right now. I'm having to say no to a lot of people wanting to be a sponsor on my channel. So, anyway, no, crypto interest is waning right now, and I think it's about ready to get worse. So this is a cliffhanger edition, and it doesn't look good. So set your dials accordingly, not just to ×2 speed. And new viewers, what I do on this channel is two things. I address the two biggest problems that you have in your crypto journey. First is when you click buy, you have no idea whether you're setting yourself up for a statistically probable trade or not. And number two, you're scared to sell. Hell, you probably haven't sold. And if you sold, it's probably at a loss because you got scared. You always want things to go up forever. That's why you didn't sell when things were up. You are a buyer and a prayer, and I try to convert people into profit pimps. So if profit pimping sounds good and you end up liking this content, new viewers, go ahead and subscribe at the end of the video. Hit thumbs up. Returning viewers, hit me some thumbs up. Maybe leave me a quick comment. Help the algo during this lackluster interest in crypto time right now. And if you're new and you subscribe, let me know which crypto pronoun you want to have, Cryptilian or Crypto Crackhead. So with that out of the way, let's get going. Cliffhanger edition. And you might want to draw these lines on your chart, especially if you're actively trading, or if you just want to know which direction Bitcoin's about ready to fly, because it's being affected by other major assets. So here we have Cardano on the weekly chart. We have a very, very clear line. Cardano is about ready to fall off a cliff. And if you want to zoom in, see how much activity this has gotten. Look at that. Oh my gosh, look at that. Oh my gosh. So it's getting a lot of activity. See all this? It's pretty much the line of interest right now. Bitcoin has the same thing going on, but it has changed. Earlier, Bitcoin's battle line was the monthly 10, which I have drawn in with this arrow right here. See this red arrow? So if I go down to the 15-minute chart and maybe put price back on, you can see very clearly that the point of interest during May and June, when Bitcoin was attempting to close above its monthly 10 EMA, which is very important if you're not going to have a very long time of downturn, potentially with a bull trap first. And most traders have covered it. I've covered it. Go back to my previous videos about the monthly 10 to watch that. Anyway, so this is the monthly 10. Look how much activity I got. Okay. After July started, because it wasn't the line anymore because it closed below. So here's the last day of June. Look what happened right after that. The battle line changed. Now this is the battle line. Look at this. It's getting all the attention. Let's zoom way down to the 1 minute, and we haven't gotten to the most important thing yet. So stay tuned to the end of the video. I'll tell you what I'm doing. Look, that battle line is getting a lot of attention. And Ethereum just jumped off its cliff. It already jumped. It's getting a nice reaction off of this support area down here, which I'll show you how to make that here in a minute. But Ethereum already jumped. Ethereum can lead the market. Bitcoin, thank goodness, didn't jump. And let's actually see the percentage drop. So a 4% drop. I'm guessing Ethereum's was more severe. Yeah, 6% drop. So that's what we have going on. Everybody and their cousin on YouTube, crypto YouTube, is talking about volatility being very, very low and that Bitcoin is about to fall off a cliff. So whenever Bitcoin gets to this reading, and I'll show you the indicator right here, it is Bollinger Band width percentile. Whenever it gets down to this level, a price explosion, one way or another, doesn't matter. It can be up or down. It almost always happens right after. So volatility has essentially decreased for quite a while, and price has been crunched. And it's getting ready to move. And I'll show you a few past examples of these posturings. Stablecoin, big move, big move. Stablecoin, big move, stablecoin, massive move, and a ton of volatility up and down. It went both ways. Stablecoin, big move. If you can see, it got so, the reading got down to 0. See, so circle that. See how it went down all the way to 0? On the 4-hour chart? And look here. Look, we've been 1, 2, 3, 4. I mean, 4. There are 4 bounces at the very bottom. I mean, this is pretty intense right now. And Bitcoin fell in November 2018. So there we go. So yeah, so it got 1, 2, 3, 4 or 5 bounces before it went bam and fell off a cliff. So this consolidation is very, very mature. Very mature. Now, the whole trick is, well, if you want to be in on a trade, how do you know that there's not going to be a fake out first, which it could easily happen? So something like this. A massive fake out could happen, and then it continues down. I think this was a 40% day. Bitcoin went up 40% in the matter of a few hours. It was insane. Nope, that's not the 40% day. Where'd it go? Well, anyway, 10% in 4 hours is a pretty big deal. Got a fake out, and it screamed down. Or you can get a fake out to the down direction and have it move up. Because exchanges don't like people making money from them. They're there so you can, but it's not easy. It's not easy. Catching moves is simply not easy. And I don't think exchanges, now that they're, kind of feels like they're in bed with larger institutions to help them print exact patterns and take on shorts at right times before they sell their Bitcoin and all that stuff. With institutions playing games with Wyckoff patterns here. The move's not going to be that obvious. So I'm going to try in this video to give you some thresholds to think about, to say, okay, I'm safe entering this trade and what you might be looking at. So here we go. Bitcoin, and I covered this idea in my last video, but Bitcoin on the 2-day is getting squeezed. The red line is getting ready to push price below that orange line. And it's going to pop it down. So these squeeze plays with EMAs crunching down price, if you see a 2-day closure below this line, the likelihood of continuation is pretty high. It could end up being a fake out, but that would be my threshold. And then if you start seeing green candles being printed on the 4-hour and it closes above the 4-hour 10 EMA, you might, close those trades to the downside and flip the other way. And so this would be my clue to enter a short trade, especially if I get a daily closure, and I would just draw this line out below here, even though I'm on the 2-day chart. So I've drawn that line out. I get a daily closure down here, or hell, even below this battle line, I think I'm going to start taking that trade in tandem with Ethereum. So before I do that, though, if I do end up getting on a short trade, I want to see what Ethereum's reaction to this area of interest right here is. I believe it's made from weekly candles, maybe daily candles. Yes, daily candles. So I made this area and you might want to do this too, because Ethereum is the thing to be watching right now, even if you're trading Bitcoin only. So from this wick right here, and this is the daily candle on Ethereum from July 2nd to the candle bodies here, these 3 candle bodies, just pick, June 24th and make a box between those two. So if Ethereum reacts poorly here and Bitcoin closes below these lines, entering a short trade is going to be a good idea. Now, how do you know to get out of that short trade, close positions confidently, and then potentially immediately switch to long positions? Well, pretty easy. I would simply use the 4-hour 10. If Bitcoin can close, and Ethereum really, you'd want to see them both doing this. If Bitcoin can wick past, fail to get above the red line, and then start closing candles above it, the likelihood of continuation to the upside is pretty high. And that's when I would get out of a short trade, a secured closure, not a wick pass. So if it goes way up here, right, on a wick, on a 4-hour, but the 4-hour is still ticking. So you see this on the right hand side here, where my cursor is, it says an hour and 48 minutes left. If price were up here, that doesn't count. I want it to close and the next candle start. So this candle closes above, the next one starts above that red line. Then it would start curling around like this. So I would, do it down here, but if Bitcoin starts recovering, it looks like that down move was the fake out and the real move is getting ready to come up. So the tables would turn in that case. A closure of the 4-hour candle. So that's how I would play personally a fake out, if I start playing first to the downside. And again, I'm going to have to look back and forth between Bitcoin and Ethereum. Ethereum needs to bounce here or not bounce here, and Bitcoin gets a daily closure below its cliff. I'm going in on short trades. And I will reverse my position based on the 4-hour chart. Now, what could be happening here is that the last daily lows might be considered this right here. And Bitcoin might simply be putting in a typical pattern of, some type of triangle and making a higher low. As if it doesn't just want to say, hey, I'm going to bounce way off this level. It says, no, I want to form a low, come up a little bit, recheck this, form a little bit of base, and then lift off. That could be what's happening. Because it did break this level and scream back above. And it checked it the next day, but that was on its move to making a high, a local high. So after that local high, Bitcoin could easily just be coming down to test this to make a higher low before it then tries to make its first higher high, local high in quite some time. Since June 29th. So in a posturing, this posturing does make sense. However, it is a slightly more common that because you got closure above the 10 EMA, the daily 10 EMA continuation was slightly more likely. So this isn't too crazy yet, but it's easy to tell if this is also going to fall off a cliff. Cardano, getting ready to fall off a cliff. So you might look at all 3 of these assets. They're going to move together. Even though Ethereum is looking worse than each of these 3, but maybe this is its new battle zone right here. Its battle zone is just I guess it's just a little lower. To the upside, if this week the move seems to be happening to the upside, it's going to be even more obvious. You're going to, on the weekly scale, and you might want to make this line here too, on Ethereum and Bitcoin, just mark where the weekly candle started, mark it off, maybe with a straight one, so hold shift while you do this. If the week can flip green, the rest of the week is very, very, very likely going to stay green. It will keep its momentum, most likely. And it typically happens before a Thursday in a week. Usually. So if by Wednesday, price is below this line on Bitcoin, you're safer getting ready to trade down, especially if you get a weekly closure below this line. It's cliff, Ethereum's cliff. On Bitcoin, I already have the line marked for the weekly, so it's going to be easy to tell if this week the move's going to happen to the upside. Price is going to flip that, and the rest of the week is going to turn green. It's going to be easy to tell. And you can do this on a daily basis as well. You can if you like the smaller time frames like 15-minute, 1 hour, you can simply mark a line where the daily started, go down to your favorite small time frame, and start seeing how price is interacting with the opening of that candle to see if it flips around. And you can do the same for the weekly as well. So if the week flips green, that's going to be an obvious signal that momentum is likely going to expand to the upside. It's just a basic TA charting, but it's likely going to work if it plays out that way. You likely won't get a fake out to the upside if the week flips green halfway through. Wednesday, Thursday. Man, Cardano is falling off that cliff right now. This is looking pretty bad. All right. So on the hourly, we have no bullish divergence yet. It looks like it's going to take a step down lower, folks, unless it just gets a hell of a reaction. Yeah, it could just have a good bounce like this without much bullish divergence. But what you want to see before an upturn here is, at least on the 30-minute, usually Bitcoin doesn't start moving up until the 30-minute RSI is about at this red line on the RSI plus EMA indicator. It's typically failing its hourly 10, and which means it's going down still, right? If you keep failing this red line, boom, 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 you're just getting pushed down. So even though I'm on the 30-minute, a very basic rule of thumb that you can take with you for free info, is taking on a long position before the 30-minute RSI has crawled its way back up to this red line. The likelihood of you not being in the right trade is pretty high. Now, maybe there will be a bounce, and you're trying to trade a bounce, but I sure as hell wouldn't try to catch some wick. I would wait until you get this signal, and maybe you lose out on a little price action, but who cares? It's better than to keep going down. Right? I would rather trade with confidence that, okay, price is going up now if I'm in a long. So right now, on the 30-minute chart, it's looking pretty bad. It's starting to curl around. We'll see what happens. So in the short-term time frame, you might just be able to, on Ethereum and Bitcoin, is you need to look at these levels. So between 2018, the price, 2018 and 1992 for Ethereum, you need to keep your eye on that with the 30-minute RSI, see when it gets there, and be determining what kind of reaction you're getting off here. On Bitcoin, the battle line right now is at 33, right at 33,000. Maybe more like 33,050 or something. 33,000, yeah, 33,050. Mark that off. And Cardano, the cliff is at $1.30 even. So right now it looks like a pretty good reaction's happening, potentially happening at each of these battle lines. But the thing is, the battle line before this was higher. The battle line just moved down. Ethereum is dragging down Bitcoin and potentially Cardano. Because Ethereum already jumped. It jumped off its cliff. And maybe I didn't choose the right cliff. Actually, let's see. Maybe I did just choose the wrong cliff. Let's investigate. Nothing here on the 2-week. Yeah, this actually makes sense. So I might want to drag this down to, so I would actually pull it down to 1985. A good birth year to 2018. So this is a mixture. So this box is a mixture of a weekly candle to an important daily wick. And so, yeah, that would be my zone for Ethereum. And if Ethereum starts, if it closes a day, I mean, if it closes the day down here, the next day is probably going to be even bigger red. You want to see a reaction, like a wick. You want to see a reaction, then it come up and close up here. Then the next day could be green. But if the day closes fully in here or lower, it's probably going to fly down, folks. What else do we have looking at? 4-hour chart. Let's pull up some more EMAs. Let's just look at the 4-hour 89 EMA and look at price compared. So this is on its way, this is on its way down. Actually, it started at the cliff as well, didn't it? So let's check out how price has been reacting to this 4-hour 89. It's pretty important. Look, fell off. So it had it as support. It broke support, fell off. Now look. Resistance, resistance, broke through resistance, lost it. Resistance, resistance, broke through it, lost it. Resistance. All right, let's zoom in so you can see it. So perhaps one of the most important lines in crypto or in Bitcoin right now is the 4-hour 89. Resistance, broke past it, tried to stay above, retest, fell through. Resistance, used it as support, which is cool, broke through, lost it. Resistance, broke through, held it as support, fell through. Pure resistance, busted through, on the retest, fell through. So, but now look how close that purple line is to the cliff. It's getting ready to squeeze price out. Price has to go one way or another. A squeeze play is getting ready to happen on Bitcoin. A pretty definite one on multiple time frames. Look at this. Look at the 2-day. Another squeeze play. See this red coming down? Getting ready to pop price out one way or another. Let's look how it just happened on Doge. Got a very violent reaction about a day after I let folks know on a live chat. This is a squeeze play and it's getting ready to slam down. And I said, I think it's going to break down. So historically, the 10 and the 89 on Dogecoin, on the daily chart, it makes for some moves. They get a lot of action for some reason, this combination on Doge. Squeeze it down. Big move. And just, do you think it's a coincidence that that move happened like right at the squeeze? No, it's not. It squeezed it out. 50% move. 45% move. Okay? Squeeze play on Ethereum or on Cardano. It already had that squeeze. Boom. Do you think it's a coincidence that Cardano jettisoned down right as the red crossed the purple? No, it's not. However, you're getting a different squeeze play now. I think. Which chart is on? Let's get rid of price. So it might be the same as Ethereum. Yep. Okay, so look at the 5-day chart. Red, yellow, squeezing price. It looks like it just broke down. And if you look at Ethereum, it already happened on Ethereum. It squeezed price down, tried to get back up, failed the 5-day 10 and 21. The exact two lines. The exact two lines that squeeze it out, failed it, and it's fallen off a cliff. This is looking extremely bearish, folks. However, this could all be, algorithms printing price exactly the way, folks want it to get people in short positions so they can take on longs before they start buying Bitcoin while holding long positions. So this could be a bear trap specifically, so people take on shorts. It's flirting with that line exactly. So that's why it's important to wait on closures. It limits the chances that folks getting ready to throw tens of millions of dollars at Bitcoin, at the actual asset itself, to raise price. It limits the chances of them tricking you into taking shorts or longs in a different direction, just so that they can take on the opposite position before they hit buy or before they hit sell. However, not thinking like a whale, just general assets, normal market without larger players than others, mass market psychology instead of the psychology of a select few institutions. This is very bad. However, you got to think like a whale. If I wanted to take on long positions before buying a lot of Bitcoin, because I wanted to make money from my leveraged play and my Bitcoin itself, what would I do? I would sell the hell out of the Bitcoin that I have now, tens of millions of dollars, drive it down to a place where obviously a lot of people are going to be looking at the same thing, and they're going to feel that's fallen off a cliff. They're going to take on shorts. So if I want to take on $20 million of longs on BitMax or whatever, I don't work with any of the exchanges. I'm not advertising for any. I actually recommend against leverage. But in thinking like a whale, if I need to put on $20 million worth of longs, I have to have exactly or more $20 million worth of shorts. So if there aren't enough people interested in shorting, I cannot take on $20 million of longs. It is a one-for-one deal, right? It's a mutual contract, essentially. So if only $10 million worth of shorts on whatever site that this Bitcoin cartel are using, they will drive price down a little farther, selling the Bitcoin itself to get more people to come on. Then, yay, we can have our full 20 million of longs. Okay, let's take on our longs. Now let's buy Bitcoin, and bam, 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 bam. Relief rally, here we go. So thinking like a whale, it's the exact inverse of what looks like is happening in mass market psychology. But the trick is, you don't know which one's going to play out. And if it looks like it's playing out in one direction, you need to be nimble with your trade and know when to get out. So this video, I covered very specifically on, really, you can use this simple rule on any asset. If price closes above the 4-hour 10 EMA, closes, crypto has the habit of continuing in that direction at least for a day or so. It just has the habit. Closed above, continued. Closed above, continued. So if you're down here and tomorrow price comes back up after falling off this cliff and closes above, regardless of profit or loss or whatever, if you're in a short position, that would be the time to close your positions and maybe get flat, be neutral, or maybe take on long positions because the chance of continuation is very high. And so in order to play with trickery of whales or just mass market psychology, you can have a system of very, very simple rules that tell you when to enter a trade or when to get out. I don't want to sit here and tell you when to get into a trade, but rather give you an idea of these cliffhanger lines. If you wanted to take on a short, focus on daily closures, not a wick. So if the day comes all the way down here, the chance of it coming back up and reacting hard is pretty high. So wait for the daily closure, right? Don't take on shorts in the middle of the day. In this one scenario, I sure wouldn't. Because the chance of that being a fake out to the opposite side of where the volatility really will go is pretty high in this special scenario with volatility being so low. So I think in general terms, if I can suggest, points at which to make a trade or not to make a trade without offering financial advice, in this special scenario of low volatility getting ready to expand heavily, I would wait for a daily closure to decide. I wouldn't just say a 4-hour candle or a wick pass on the day, it's going to keep tanking. I would not do that in this scenario. And if you do go short, in summary, when the 4-hour chart, if a candle closes above here, you might want to get out of your shorts, close those positions, and really look to get long. At least for a little bit to take profits quickly. All right? On a long trade, in summary, you want to look for this week, you want to mark off where the week started on each of these assets. Really, you want to do it on all three, Ethereum and Cardano and Bitcoin. In your long positions, I probably would not get too crazy, overzealous, or confident in longs until this week flips green. So what that would mean, so you can see how this line is here, what that means, let's go down to like the 1 hour. What that means is, actually, let's go to the 4 hour. That means is you're going to have to get a good reaction here somewhere. And price will need to close above. And if you decide to take on long positions, okay, maybe. But when it gets to this line where the week started, you might want to think about taking profits, because it could get rejected and then really flip red, like the week could flip red. So if you're going to take on longs, per that not financial advice for entertainment only words about the 4 hour 10 EMA, I would think about strongly closing them and taking your profits here at the beginning of the weekly candle, or taking half profits and then moving stops into clear profit. Either or just don't take profits, move your stops up into heavy profit, comfortable profit. So that if it downturns, okay, you just took profit and, got rejected and the week isn't going to flip there. And then if the candles, 4 hour candles, can continue closing above, maybe a couple below, but staying above, and the week flips green, I would then look for some pretty solid continuation. And by that point, the daily Stokes would probably be flipped around by Wednesday, if that were to happen. Where could this fall down to? Last topic. If Bitcoin falls off a cliff and it follows the 𝒂𝒂 accumulation pattern number 1, it will, it'll hit a slightly lower low, somewhere around there. What it'll probably hit is the weekly 89, or it might actually just come up just shy, or it might wick just past. So this would be kind of a common sense type of deal. It might wick past and close up here. Or it could, the next day come all the way down and close way up here and then turn back around. So that's if 𝒂𝒂 accumulation pattern number 2 plays out. I would guess anywhere between 27.7 and 25.5. Somewhere in there around this 89 moving average of the weekly. I would guess just above it. If Bitcoin and Ethereum keep tanking, it might be wise to look at Ethereum and guess to where it's going to go. Well, Bitcoin just went to the bottom of its last structure. About right. Let's just pick these candles. That's where Bitcoin has just recently gone down to. So if Ethereum is going to go structurally where Bitcoin's going, see this? The last, it's actually gone a little lower. It's gone all the way to that bottom wick. Exactly. And it's been closing candles about these closing candles. So what Ethereum might be ready to do is do what Bitcoin's done. And it could drag Bitcoin down so much farther. Oof. It'd be a nasty bleed, folks. But I would guess that Bitcoin's going to get a bounce whenever Ethereum hits that, if you do see a bloodbath. So in order to predict where Bitcoin would go down to on its chart, I would use Ethereum and look for price getting close to here, because you can bet your bottom dollar there's going to be a strong bounce. Should Ethereum on all assets, like the whole crypto market, you'd probably get a strong bounce after that. Probably to come up and get rejected by the daily 10 EMA, or the weekly 10 EMA, or even the daily 10. So, and then, depending on how it bounces, it could keep going lower, but we're going to have to recess after that. So that would be my first target. In order to guess where Bitcoin's going to go, I would look at Ethereum, kind of target it on this line. Yeah, I would target it on this line if it turns into a bloodbath. And Bitcoin overall targets, obvious ones. Last market cycle high, right? Actually, 2 market cycle highs ago. Last market cycle high, the weekly candle closed at 11.4. Other areas of hesitation, you got a lot of activity right here as well at that wick. So it could only come down to 14K. So one of those three lines mixed with the weekly 89 EMA, which is somewhere over here in the 23 to 26K range. So you have a few areas of interest, and you'll probably get a bounce at each if it just keeps coming down. Or you could just get a massive capitulation, which might happen as well. So that's the bearish news, but hopefully this video has shown you how to be nimble when you have cliffhanger moments mixed with volatility and expansion getting ready to happen. It's going to be hard to play. If you take on positions, know when to get out of them. I just gave you a simple trick. You don't have to use that, but you need something. Don't just say, oh, but it's going down, and find yourself yelling at your screen, seeing your account drop because you're in a short position as Bitcoin bounces hard off of a support line. And it was a bear trap. Don't get caught in a bear trap. Don't get caught in a bull trap. Use simple systems to know when exactly to get out of trade if you decide to trade this before it's obvious, so that when it is obvious, you're already in a trade, hopefully even have taking profit. Even if you took a bear trap, you knew when to get out and you took profits earlier, then you flipped your trade. Be ready to be nimble. Don't just say, I'm going for the moon and I'm holding it. Oh, my liquidation. No, don't look at your liquidation price. Know when to get out. And that's all I want to say to you guys, because I think what's going to happen is when I look up quant graph stuff and I look at liquidations, I think it's about ready to skyrocket. And I don't want you to be a part of that. I don't want you to become one of those numbers. Looking at your liquidation price, swearing it's going to go down, yelling at your screen. Know when to get out of your trade. I just gave you simple tools. Y'all just got simplified.